Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about Quant and what our models are making of some of its recent price action. So I'm going to start off here on our website, polaritydigital.io. This is the site that we've launched in collaboration with Jay over at Daily Crypto Analysis. Highly recommend checking out his channel if you've not already. Link in the description. And so Quant, we can see it sitting here now number 35 in terms of total market cap. And I want to start off by talking about risk for Quant, what our risk models are making of it. So we're going to start off with our short-term upside downside potential indicator. If you're not familiar, that's our risk model. And we have different time frames. So the short term cares about moves that play out over days to weeks. I'll also talk a bit about the long-term version that cares about months to multiple months in a minute. And so the way you can read it is that higher values on the UDPI, that's this light blue line here, mean higher risk, especially from that shorter term perspective. Lower values mean lower risk. And so, you can see the model did a great job identifying this low all the way back here, March 2020, and also then the market cycle top all the way up here in September of 2021. Now, Quant has been in a pretty nasty downtrend, or had been a nasty downtrend until June of 22, but then we really had this nice rebound. And so how did the short-term UDPI react to these moves? Well, it actually was able to call these kind of local tops quite well. You can see it called this one pretty close right here. It basically saying Quant was getting quite overheated in the short term, and that even though we had a short-term bounce after, had to come back down and correct. And that's then when we put down this bottom, going down all the way to negative about 0.2 on the short-term UDPI before rebounding back up to this local top here at around $200, where we got up to 2.77 on the short-term UDPI before cooling off. Now we have bounced again, we put in a local high back over here, and now we've come back down and we're maybe being able to start move back to the upside. And so when I'm looking at this metric, just given what it's been doing more recently in the price action of Quant, I'm kind of looking at this around 1.5 as being kind of the first target we might look for if this kind of current bounce in Quant can continue to the upside. And then if we can break past that, I think that a reasonable target could be up at the 2.5 kind of general area like we got to in this bounce and we got to in this bounce as well. So part of that's going to depend a little bit on the broader market to see if things remain bullish enough to allow Quant to move back up. But certainly the model in the short term is leaning a little bit more on the side of there being more upside than downside that's plausible for Quant in the short term overall. So you can see it's sitting at about negative 0.7 right now, suggests that there's a little bit more realistic upside than downside potential in the short term, but nothing guaranteed, right? It's very possible that something happens to make the market really bearish. If Bitcoin starts falling off of its current levels, that you could see Quant going back down and seeing the short-term UDPI, then maybe have to go back and retest one of these lower levels like -2, which has acted as support back through here and through here. Would certainly be possible before we could chart a course to the upside. And so I think really what's going to be the key here is watching what the broader market does. I really think that Quant's not going to go on its own. I think it's really going to be dependent on what Bitcoin does. I think if Bitcoin makes a run for 30K and above, then I would expect Quant to be targeting these kind of upside targets on the short-term UDPI. If instead we get a bearish move from Bitcoin really falling off of current levels, I think seeing Quant falling back down and seeing the short-term UDPI retest some of these lower levels is certainly a possibility. So we'll have to wait and see. I think we're really at a crossroads, and it really, again, depends on broader market in terms of this kind of more short-term outlook of where Quant might be likely to go. So let's talk about the long-term UDPI for Quant also. So this, as I mentioned, is months to multiple months, much more macro in its focus. And so you can see that, we had gotten quite elevated through this kind of whole run here, had the long-term UDPI getting up to about 1.3 and about 1, which actually, as you'll note, has often served as kind of local tops in the past for Quant on the long-term UDPI. Here we kind of went sideways for a while before bringing the next move up. Here we had a big correction before moving up. Here again, we had a big correction before kind of going sideways and eventually up. And so what we saw here was we got to similar levels. Now we're going sideways again. And so I think it's plausible from that perspective. We take a longer term kind of time frame horizon look, where again, the short-term UDPI is really about capitalizing on short-term volatility. Long-term is trying to identify more macro trends. What this is basically saying is that we're getting down to -2. We're getting down closer towards these points that we've seen in the past that have oftentimes been good accumulation points for Quant. And so it's totally plausible to me that we will end up going sideways, or maybe you have to correct a bit from current levels, or maybe something like this, before another big move to the upside is possible. The more that long-term risk cools off, the more long-term upside is accrued, is plausible from that point. And so really, the further down this goes, if you're long-term bullish on Quant, just the better opportunity it is in the longer term. Now, obviously, none of this is financial advice. You can make your own opinion about these data. But that's just one thing to think about, that when you get to these really low UDPI levels for Quant, at least historically speaking, they've generally been nice acquisition periods before bullish phases that have left. And so in the short term, it might not be so nice to think of Quant having to go sideways or even correct from here. But in the longer term, that might just end up giving more favorable opportunities for maybe a bigger bull run going to the next point. So that's where it's important with these assets to keep in mind time frame. This is really talking about shorter term, and if how plausible a shorter term correction is. This is really talking about longer term horizon and whether or not things might be in a good or a bad accumulation zone from a historical perspective, at least, based on what Quant has done in the past. So something to keep an eye on. I think again, my kind of broader perspective is that if broader markets generally remain bullish in that more macro sense, if we don't get a meltdown in the stock market or things that could really set things, tip things off their course, I do think it's plausible that the crypto market is transitioning out of bear market territory into accumulation before maybe another bull move. And what I'm seeing with Quant is not inconsistent with that. Quant showed a lot of relative strength and now has kind of gone sideways. It's very plausible to me that this looks something like, this, where we had some strength going into accumulation, or maybe even something like over here before a move to the upside. Time will tell, but that's kind of the base case I'm working with crypto. Again, conditional on us not seeing the broader markets completely collapse from here. All right, so the final model I wanted to talk about then is a bit different. So this is the momentum bias indicator. So basically it quantifies momentum in the market. So when you're above zero, that's this white line, that's bullish. And generally speaking, you'll see momentum kind of pull price up with it as we kind of establish this positive prevailing momentum. But then when you're spending a lot of time in the red, that's negative momentum bias, and that tends to happen in these bearish periods. And then what you'll often see is in these transitions out of bear markets into bullish phases, this kind of oscillation around zero, where you kind of go up, down, positive, negative, before you then explode to the upside and have these big parabolic runs. And what I had mentioned in the past about Quant is that in this show of strength that it had coming out of the June lows, it started to do that kind of oscillation around zero again. It started to exhibit that kind of behavior that we've seen in the past that can act as the prelude before bullish movements. And this is, again, one of the reasons why I think having a kind of outlook on Quant as it's transitioning out potentially of a bear market and maybe into a new bull market is this exact kind of behavior. The more we see this, the more evidence, in my opinion, is being accrued in favor of that thesis, that hypothesis, that this is an accumulation that could lead into another bull market. Now, again, with all those obvious caveats still applying, with us not, entering a massive recession that crashes everything, that this kind of looks like the behavior that we've seen in the past. And again, these kind of behaviors I'm mentioning with Quant, they'll show themselves with all the different crypto assets. You can go look at Bitcoin, you can look at Ethereum, show the exact same kind of behaviors. This is the kind of bear market behavior you'll see. This is the kind of transitionary behavior you'll see leading into a new bull run. And so overall then, what my kind of assessment is, or what I'm thinking about Quant as I look at these different models and their output, is I think in the short term, it's kind of anyone's guess, right? I think that's really going to depend on broader markets. We could rally from here, maybe see the short-term UDPI retest these levels, but it's also plausible we go back down here as well. But from the longer term perspective, that's kind of inconsequential. Kind of who cares? Unless you have really short time horizon, if you're in it for the long haul, that's not really something that's going to be all that meaningful. And so then as we're seeing long-term risk is continuing to go on a downtrend, and really the lower it goes, just the better and better the risk reward looks like from a long-term perspective based on the long-term UDPI's perspective, what it's seeing in the market. And then again, as we kind of see, if we see the momentum bias indicator continue to exhibit this behavior that tends to happen in these transitions out of bear markets into bull markets, it might not be very exciting, it might be kind of boring, but really anyone looking back on it, would have been happy to be buying Quant back here to see what it ended up going to do up through here. So none of this is financial advice, just make your own opinions about the data. But I think it's always important to kind of get different perspectives, not just thinking only about the short term, which is what we often think about because that's just what we're paying the most attention to oftentimes, but also kind of not losing the forest for the trees, paying attention to the longer term trends and thinking about where things could go. And then kind of marrying that with your fundamental assessment of quant. Do you think it is something that has a lot of fundamental value that will stand the test of time, etc.? And that can be a useful way of analyzing these assets to think of when is good accumulation points, when are good distribution points, etc. So if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there. And definitely go check out polaritydigital.io, our website, link in the description, to see these data for yourself.